Hi and welcome to the Devon webinar. Great to have you along once again. I'm Greg Smith, Head of Retail at Devon, joined today by Ben Jenkin, Portfolio Manager of the Devon Sustainability Fund. Great to have you along, Ben. How are you going?
Yeah, I'm good, thanks, Greg. Appreciate having me along. And
Excellent. Excellent, great to be here. Well, today we're going to be talking about something that's pretty current, AI. Obviously very current. It's been sort of the buzzword all year. And we've obviously had names like NVIDIA drive the US markets higher. So we're going to try and bring it back home a little bit, but yeah, look, Ben, just from a, I suppose, a US and a global perspective, it's been AI, it's been NVIDIA, it's been these sorts of names that have driven the market. I think around about 30 S&P 500 rise this year has been NVIDIA. Are we getting ahead of ourselves, or what's it all about?
Yeah, I mean, it's a really good point, Greg. And I guess NVIDIA has been the first order effect of AI. In other words, their chips are needed today in order to train some of these language models that we're seeing. One everyone seems to be aware is ChatGPT and other sort of search models. But these chips are required today in order to train and house a lot of the processing of these language models. So that NVIDIA's, as I said, been impacted today. The second order effect is where it gets interesting, I guess, for local markets more globally, is in the infrastructure. So AI requires a tremendous amount of infrastructure in order to support these models. So that form takes the shape of a data center, and we're seeing tremendous demand in data centers more globally in order to support the backlog of these models. So AI is real, it is happening. There's genuine investment required in order to support what some of these companies are doing. Now that presents opportunities for local markets, as I said earlier, because it creates a picks and shovels play on AI, and we're seeing companies like Goodman Group, Infratil, NextDC in Australia really accelerating some of these investments.
Now, you mentioned Infratil, so they've raised over $1 billion. This has obviously got that sort of theme with their data centers business. I mean, what can you sort of tell us about what's happening there?
Yeah, that's right, Greg. So Infratil over the past week or so has raised over $1 billion in equity. Now, the majority of that capital raised is going towards CDC, which is their data center business in Australia and New Zealand. As part of that raise, they've announced a significant expansion to their data center capacity from 1,200 megawatts to over 1,800 megawatts, which is, an over 50% increase, which they plan on building across the next decade. To sort of put that into context of how big that scale is, currently today it's costing $13 to $16 million Australian per megawatt of data center built. So, on 1,800, which is going to take them over the next decade and probably end some, you're looking north of 25 billion Australian dollars. So it's substantial, and the $1 billion they'll be putting towards the business, CDC that is, to accelerate its near-term developments. Now, they own half CDC with another partner, some Australian super funds. So there'll be, another matched commitment on the other side of it as well. So that's going to get them well funded for the following few years, and they're raising a lot of debt to support that as well. But I guess that's interesting because it provides local markets an opportunity to, participate in this global thematic we're seeing in the form of AI and the shift to cloud computing more broadly.
And do you think that's why the raise was so well supported, perhaps?
Yes, yeah, I think the raise, there's global investors are looking to invest to this thematic, and the options to a certain degree are limited. You've seen a lot of property investment. Some people look at data centers as a property investment, and you've seen a lot of big funds over-index in office and retail, some more traditional assets, and they're looking to shift their exposure to the likes of data centers and industrial. So it was really well supported. There's lots of capital, looking to grab a piece of the space. And on top of that, they announced it with the increase in capacity and an announcement that 400 megawatts is under negotiations at the moment, which is, you know, a pretty supportive environment, environment in terms of the underlying demand. So.
And you mentioned capacity, and I understand when you look at sort of the electricity requirements or the power requirements of AI, it's many multiples of, say, your typical Google search. I mean, bringing it sort of back home again, what are the implications for our electricity sector?
Yeah, that's dead right, Greg. And it's interesting you mentioned the Google search, which is a great example because it's something we can all relate to. A ChatGPT or a Google AI search can require anywhere between 5 to 10 times more power requirements on a single search. So again, that requires a whole bunch of infrastructure behind it, and then to your point, a lot of energy. And it's interesting, and if we look at New Zealand in terms of a local context, electricity demand grew at roughly GDP from the 1970s to 2007. Since 2007, it's been broadly flat with all the energy efficiencies we've seen in whiteware, industrial, and these sorts of things. Now, in the last year, we've seen electricity demand pick up in the low single-digit percentages. And part of that is we're not getting the same benefits we had in terms of energy efficiencies. You've seen EVs come through. You've seen the shift in the industrial world from gas, coal boilers to electricity. And then you're seeing data centers which are ramping up and at a rapid rate, particularly in Australia, less so in New Zealand, but they are coming quickly in New Zealand as well. So that presents a real problem for the electricity section, for the electricity sector, or opportunity, some might say. And we're seeing, you know, supply is coming. You know, it's going to be interesting to see how much can come. We've seen Contact Energy looking to deliver at the moment a large geothermal plant. We've seen lots of wind and solar coming, but in terms of major hydro developments, we're not seeing at the moment. We're seeing some in geothermal, but it's going to be really interesting to see how the industry responds to some of these demand pulls we're seeing at the moment. So.
Excellent. So anyway, plenty of implications from AI and data centers for Trans-Tasman investors. So hey, thanks a lot for those insights there, Ben, and great to have you along.
No worries. Thanks, Greg. Thanks for having me.
We'll leave it there, but yeah, do feel free to get any comments on the webinar or anything you might like to see the fund managers talk about. But we'll be back soon with another webinar. And until then, I hope you have a great day and a great week. Bye for now.